Good afternoon and welcome to Beating Big Tech at its own game. In today's environment, it's never been more important for banks to differentiate themselves. Leveraging data can help financial institutions identify overlooked areas in the market, enabling them to lend faster and smarter to a greater array of businesses. This afternoon's webinar will feature the points of view of two executives representing a bank and a fintech, and they're going to tell us how to do just that. So thanks for joining us today. I'm Emily McCormick, the Vice President of Research at Bank Director. I coordinate and execute our research projects, including our annual surveys and ranking banking study. I also write for Bank Director Magazine and BankDirector.com. This webinar is brought to you by both Bank Director and Oak North. Bank Director has served the financial community since 1991, focusing on the strategic issues most fundamental to bank executives and boards. And through its ON Credit Intelligence Suite, Oak North helps financial institutions build deeper relationships with clients, unlocking new opportunities with lower risk and greater efficiency. Now, before we get into the meat of this discussion today, I just have a few housekeeping items to review. First off, we can't hear you. You're in listen-only mode, so don't worry about that. We do recommend that you click on the slide bar at the bottom of the screen. That's going to put the presenters into full screen mode. If you have any questions for our speakers, you can note those by clicking the Q&A button. That's also found on your right-hand side of your screen. You can do this at any time during the presentation, and we definitely encourage you to ask questions. Once our presenters have finished with their talking points, we're going to have a Q&A period, and we're going to address those questions during that time. There is no need to take detailed notes. The presentation will be shared with all attendees within 24 hours via email. It will also be available on bankdirector.com and oaknorth.com. If you have any technical issues, again, head to the right-hand side of your screen and use the moderator chat feature. We'll do our best to take care of those. We'll also have a couple of polls during this discussion today, and those will appear in the sidebar near the Q&A button. When you've selected your answer, just hit the vote button, and that will submit your response. Finally, the opinions expressed in this webinar are those of the individual speakers only and do not necessarily reflect the opinions of the other speakers or the entities with which the speakers are associated. With that, let's introduce our speakers. Hunter is the Chief Information Officer at Oak North. Prior to joining their team, he was one of the first commercial engineers at Palantir Technologies in Europe, where he led trader oversight partnerships with large financial institutions. With Sean today is Sam Sidhu, the President and CEO of Customers Bank. Under Sam's leadership, Customers Bank issued more than 100,000 Paycheck Protection Program loans with an aggregate value of more than $5.4 billion, making the bank the fifth highest PPP lender by loan number. With that, Sam, Sean, please join me on camera and we will get started. All right, we've got Sean and Sam. All right. Thanks, guys, for joining us today.
Thanks, Emily, so much for having us. And I will make a quick correction. It's over 300,000 PPP loans for nearly $10 billion, but that was a little bit of stale data.
Well, it was definitely a lot of PPP loans that you guys issued for sure. So before we get into our discussion today and talk about your journey together around data, I hope you could both provide a quick introduction. Tell us a bit about your organization. So Sam, let's start with you. Could you provide a bit of background about Customers Bank?
Sure, absolutely. Excuse me. So Customers Bank is about an 11-year-old innovative startup. It's grown from, about 250 million in assets to nearly 19 billion in assets in its relatively short history, making it currently one of America's 100 largest banks as measured by asset size. We've achieved our success by combining the established expertise of being a regional community bank, but layering on the modern offerings and platforms of a technology company, which is the hybrid approach that we talk about a lot. Our branch-like format is augmented by highly talented and experienced and successful banking teams who deliver the full service of the bank through a single point of contact, high-tech, high-touch model. But we only have about 12 branches, about the same number as the platform bank that the management acquired in about late 2009. But we also have offices in Boston, Chicago, Dallas, Harrisburg, New York, Orlando, Philadelphia, Providence. I'm not sure why I did that in alphabetical order.
Well, Sean, to you, tell us a bit about Oak North.
Yeah, thanks, Emily. So to understand Oak North, it makes sense to sort of think about the genesis of how we got here. So our two founders, Rishi Khosla and Joel Perlman, previously had another business, which was outsourcing analyst and associate roles at debt funds, banks, hedge funds, PE firms, and so on. And while they were building that business, they needed a loan for working capital purposes. And they went to all the high street banks in the UK, and they got variations on no, because they didn't really have assets to pledge, because they've been working for zero comp for some time. They had as much personal debt as they could load on, and the best offer they got in the UK was £100,000 pledged against a house. Then 18 months later, they were working with Citi in New York with the Special Situations Group, and they were offered $10 million as a dividend recap unsecured. And they thought, this is just completely crazy. Like, the best we could get in the UK was 100K secured, and in the US we're getting offered $10 million unsecured, and that's only because Citi was a customer, and so they were prepared to do a loan that they wouldn't normally do in such small size. And so when they sold that business, they grew it to over 3,000 employees. They sold it to Moody's Corporation. It became the heart of what is now Moody's Knowledge Services. But that thought stuck with them, and they basically took the weekend off and then decided to start a bank. And they thought, we're going to just address this problem of medium-sized companies that need debt finance to scale and are too small for the big banks to talk to. They're too large for this sort of automated style of lending that works at the lower end. And they need something a little bit special, and they have this enormous funding gap. And so we thought we built software and technology, and this is why customers resonate so strongly with us, is we think at the heart of this is a data problem and a technology problem. So we build technology to analyze data, really try to understand our customers, partner with them much better, so we can lend to them better. And that technology is what we use in the UK for our own bank, but what we license to banks in the US to try and address this problem, which we call the missing middle, this sort of underserved and overlooked segment of companies.
Going to focus a lot on that data portion throughout this discussion. So let's get into it, and starting with a couple of questions for Sam specifically, because the industry is awash in data in a lot of ways, but has really struggled to get meaning from it, generate financial returns as a result of it. So Sam, the first part of my question is really, you give us some background on when and how maybe that Customers Bank made the choice to leverage technology, leverage big data.
Sure, absolutely. Very good question. We have always believed in technology. From our launch in 2009, the first capital offering, had sort of high touch supported by high tech. It used to be at the time MacBooks, and then eventually it became iPads and iPhones. Our digital banking team, as an example, has always worked with data, including that from third-party providers, to commonly referred as big data, analyzing it, and really focusing on the consumer deposit business, whether it was Bank Mobile, the fintech that we started, or even our Customers Bank, sort of traditional digital bank as well. What we needed to do at the company level was first to establish a data warehouse, which is easier said than done, 5+ years ago. And then we needed to wrap our core in middleware to give ourselves real-time access to our own data, which again sounds simple, but reasonably complicated. I think 75% of banks have said that this is a goal of theirs in the next 2 or 3 years. We're multiple iterations in. Now that was the first step, but that's really linked to core data, system of record type data. In a similar time frame, we actually added Salesforce and eventually nCino, This was step two. This allowed us to have access to more data that maybe our customers or relationship managers had access to, or in some cases our credit team. That was a very important sort of next step around a similar time frame as a data warehouse. And then about 3 years ago, we really started using open banking, the beginnings of open banking, third-party data, initially to underwrite our digital consumer and eventually our SMB clients, which we've now built a tremendous business which is performing significantly better than the industry. But the way to do that is first you have to have access to the data. Then you have to probably charge off a little bit of money to make your models better. And you frankly have to have a PhD or PhDs on staff to really use machine learning and AI, not just to improve your underwriting models, but to really completely automate underwriting and pricing. That was the next step. The final step is the trickiest for banks and also for us, which is to use all of the data that we have on current and prospective customers, but to have our managers and executives have access to real-time relevant data for them, whether it's dashboards, whether it's alerts, whether it's portfolio management tools like with Oak North, and then to use that data to make daily decisions. And I think that is really the holy grail of what we, and I think what most banks are looking to try to do. Right now, to be completely frank, only about a subset of our team is really proactive with this type of data as opposed to reactive. It's still great that we can at least have everyone using it on a little bit of a reactive and a look back basis, but it is very difficult to be able to anticipate your customer needs and to be able to really pivot and offer them something that they don't know they want or that they now need that they didn't anticipate that would need. So, ultimately in PPP, as you referenced, Customers Bank ended as one of the top 5 lenders in the nation, handling 320,000 loans with an aggregate almost $10 billion in value and saving millions of jobs. That's not really a big data story, but it's a story about how we use technology and data and digital marketing to kind of bring it all together. But now we also have data on hundreds of thousands of Customers Bank customers, which, for a, 19 billion asset bank, plus or minus, that's a pretty staggering, amount of customers as well as data.
Absolutely. I mean, you very nicely laid out kind of those steps. If you were to kind of fine tune in terms of the challenges you faced, what was the greatest thing you had to overcome and how did you get past that?
Yeah, good question. Lots of challenges, but the biggest challenges are generally linked to how do you drive adoption? The joke we use internally, it also just shows, where the banking industry generally is that we don't want to have all these software tools like receiving a CD-ROM in the mail and maybe installing it, but never really, using it, right? So you have to drive adoption. So first and foremost, the data needs to be entered in a clear and structured format for it to be useful. Otherwise, it's the garbage in, garbage out type analogy. So what we've done and what we're continuing to do to drive is that we're centering our processes around our technology platforms to ensure that they become central to how we do business, not how we report, how we track business, to really how we do business. And then we have to drive more members of the team to keep data digitally. And the key is having them understand the process. So I'll give you an example. Our head of marketing, Dave Patty, and I led a several hundred team member call last year to help them understand how the digital marketing process was working using our PPP customers as an example. So how we were targeting folks who were not existing customers, how we were retargeting folks who started applications, how we were targeting folks who already had a PPP loan for us for a second PPP loan, how we were targeting our existing commercial customers for PPP loans, how we were trying to estimate who had the revenue drop of 25%, like all of this sort of bringing it all together and how we use the tools that they use on a daily basis, like a Salesforce customer journey, and how it kind of all comes together. Now, typically that was our digital team that was handling that behind the scenes, but the whole bank was working on PPP. So some team members, light bulbs started to go off. Some, this was an important first step, but for all, it really needs to be continuously reinforced because the industry hasn't had to operate in this way. But the competition on and in and around the industry is really forcing us to think about things in a different way. I'd also add that we've been working to break down silos so that we can make management decisions more quickly with better information. Our tech forward culture, I think, is critical to this success and really sets us apart. But an example of this is, we've been public about our ambitions to create a digital first small and medium sized business product suite, to build a national business similar to our consumer business. We've struggled with data sources beyond traditional FICO and SPSS scoring, which is very good, but nonetheless it's not perfect, and there aren't as many similar to the personal loan industry. In the personal loan industry, there's a lot of fintech providers who've been doing this for 10, 15 plus years. There aren't as many in the SMB space, so there aren't as many partners to necessarily work with. So we're in stealth mode of potentially trying to incubate a data company to help create a platform that first assists us with cross-selling our PPP customers, but also helping us build a best-in-class national SMB business like we have on the consumer side. So it gives you a bit of flavor of how focused we are on data, but also how challenging it can be to get the best data, to use the data effectively, because you can have a ton of data, but if you don't know what to do with it, it's also extremely challenging.
Well, that's a great segue, Sam, into our first poll. We want to know where our audience is in terms of their own data journeys. Let us know, how well do you think you know your clients? And are you getting that full picture of the clients and their future needs? So the poll is open. Remember, you're going to be able to respond to the poll in the right-hand side. Just click the vote button to submit your response. We've got a range of options. You can select one, so just select the best one that represents your point of view. Sean, you're working with a lot of banks. What is your kind of prediction here? Might see these results pick out.
Yeah, I think it's a really good question. I think it would take a very brave person at a bank to say, yep, we know our customers super well, we can anticipate their future needs. Given how challenging that question is, I think everyone wants to know their customer better. I think Customers Bank, given their tech forward approach, is probably best in class at this, in terms of really having a high touch relationship with people empowered with data. But I think most institutions have real challenges. They have data silos, they have problems getting their own data about their own customers out of their core banking system, for example, to somewhere useful. It's very challenging to join data onto the external world. So data that you have about your customers is very hard to join that onto things you know about the world outside. So I think most people probably are going to be in the gaps in the data side, or they're going to say they've got good data, but it's not great structure. So somewhere around those two questions, I think, are probably the most likely.
Well, I think it's time to close the poll up. We've had it open for almost a couple of minutes now, and good, solid predictions there, Sean. We've got 38% saying we've got good data, but we need some organization and structure. 38% saying we've got gaps in the data, but we've got just about 20% saying that they really can't look beyond their immediate needs. So identifying some more serious gaps. Any further takeaways, Sean, from these poll results? Because finance is such a, data-intensive business, but this is really an area where big tech has gained an edge in a way.
Yeah, I think it's interesting, right? So if you think about what's happened in the securities division of the big investment banks, there was this enormous revolution in data, from the 80s onwards. It became this completely data-driven business. I think, consumer banking, retail banking, small business banking, and commercial banking, they want to be more data-driven. I think most institutions, if you talk to them, but it is challenging. It's hard to get data. It's hard to get good data. Hard to make sense of it, join the different sources together. Some of the things that Sam talked about in terms of joining your customer relationship data from Salesforce or nCino onto the data that you have from your core, it seems, if you didn't know anything about banks, that seems like, well, of course we should be able to do that. Well, of course you should be able to do it, but the fact is actually most institutions can't do that kind of thing. So even very simple questions like the ones that Sam mentioned, how many of our PPP customers sort of went through an application process and then kind of went away, or how many, those kinds of questions, which are very basic to marketing. A lot of banks just really can't answer that. They can't get to square one in terms of putting the data together to answer those types of questions.
Well, I mean, a follow-up question on that, in terms of banks getting that view and getting that ability to get that data. How do you get the granular real-time data that you need to get that holistic view?
Yeah, it's challenging. So you need to use third-party data. You need to make better use of your own data. You need to be smart. As Sam said, you need some very smart people on your team to actually help you make sense of it all, so you can create a granular view, a forward-looking view, ideally, of what's going to happen to your customers in the future. And then you need to empower your people with that data so they can go to their customers and be a real partner. They go to their customer and say, hey, look, do you realize your industry is going to face some real headwinds? Or maybe your industry is going to do great in 9 months' time. You might want debt finance to expand or whatever it is. But actually empower them to make smart decisions with that data so that they can actually serve their customers better, because ultimately that's what it's all about.
Well, Sam, you talked about a little bit about where you're headed, but I do want to make sure we've got a clear vision of your journey kind of looking forward. So, I mean, do you feel like you guys are leveraging your data to its full extent, or do you see areas to improve and continue that journey?
So I would imagine if you did a poll of the folks on this phone, and frankly just the overall industry, I don't think anyone is. I think there would be 0% of everyone that is actually leveraging data to its fullest extent. And part of that is just super simple. Even if you are using it to the fullest extent today, I think the world's data doubles every 2 years, as an example. It's probably only accelerating. So we're not using leveraging data to its fullest extent, but we're on a very, very solid pathway, and I think we differentiate ourselves from a typical bank in the sense that we're branch light, and we also have sort of this digital branch type approach, whereas generally most banks think of their customers as an extension of a regional branch. And we have national customers that have been acquired digitally, very similar to fintechs, in addition to our traditional commercial customers that might be near a branch or part of one of our community banking or CNI or CRE type businesses. So using that technology prowess and hybrid approach to financial services, we are adopting AI-based platforms for portfolio management with help from groups like Oak North, as well as consumer lending. We recently announced a blockchain-based real-time B2B payments platform. This is an example of the data, nor our customers are actually telling us that they want real-time payments, but that's where the industry is going, and that's where we feel that we need to go. These platforms are not created by Oak North, but our experience in working with Oak North from a change management perspective, from a access to data, from a team member training perspective, has been incredibly valuable for our ability to partner with and work constructively with other data and tech partners. Using third-party data sounds also very simple, but my guess is very few banks actually think about third-party data and layering that on to their existing data sources. So we had to change a lot of ways of how we thought about risk and operations, and then also analysis of data. But nonetheless, I think that we're on a very, very strong pathway, far ahead of most of the banking industry.
Well, Sean, why don't you tell us a bit about how you guys over at on this, and maybe give us some background on how this relationship is developed.
Sure. I'm very happy to provide some thoughts. Obviously, it'd be great to get Sam's view on it because he might have a different perspective. But basically, when it started off, I think we first met sort of in the winter of 2019, sort of late 2019, early 2020, and we were talking to Customers Bank around how our software could help customers achieve its goals of increasing and expanding commercial client relationships, driving a lower efficiency ratio, kind of reinforcing the really outstanding credit and risk culture that they have at customers. And, we were very struck by the things that Sam has talked about, the sort of growth mindset that the bank has, the willingness to use data to drive better decision-making, to improve their own processes, to learn, and that very strongly resonates with us. And So we discussed how we could use our software specifically to improve portfolio risk management, using big data and AI, using external data, providing relationship managers with deeper understanding both of their borrowers and of the industry verticals. So you want to see like the forward look of how's my customer doing, but also the forward look of what's the industry doing that they're in, what does revenue, costs, and so on look like in that industry, because that's very helpful when you have a conversation. And I think the fact that we have our own bank in the UK with, a few billion of assets under management, that's kind of proven the impact that this software can have in terms of a very good return on regulatory required equity, very good efficiency ratio was a very strong proof point. We're very much talking the same language and so on. Sam, I don't know if you want to say anything about that.
Yeah, I'm sure. No, absolutely. I think that the last point that Sean mentioned was a very important one. I joined the bank in January of 2020, after being on the board for 8+ years, and Rishi, the CEO and one of the founders, and I had a meal in January, the same month that I joined, and we talked a little bit about understanding Oak North Bank in the UK and looking at a lot of their metrics and their incredible growth, their efficiency ratios, how they kind of put the team together, and thinking about putting engineers next to bankers as they were building their internal platforms, and how they were using many of the same tools that we use, Salesforce and Cino, but really thinking about using the legacy technology, modifying it, but then importantly, bringing in data, and again, this hybrid type approach, even though, Rishi and his co-founder were relatively new to the banking, space. So I think that really helped seal the deal in us saying, we want what you have, and we're willing to be the first customer, in the US. And, little did we know what was about to happen 60 days later or 30 to 45 days later, which made it all the more important for us to have that type of access and that type of discipline.
Yeah, very important, part of the timeline of that relationship. You guys get together in 2019, and then there's a pandemic. There's the Paycheck Protection Program loans that had to be issued, the PPP loans. So I hope you could both of you tell us a bit about the role data played in the PPP and issuance, that whole process. Obviously, the demand was very much there. But tell us about the role of data. Maybe we'll start with Sean, and then Sam, you can add your perspective.
So in around about March 2020, we were, as Sam said, we were just like finalizing our agreement, and all of a sudden the world got hit by this pandemic, and we, with the PPP program coming on stream, we knew that this was going to be this absolutely intense operational challenge for institutions across the US, because banks want to respond, they want to help their customers, they wanted to disperse these funds, they realized the critical importance of this program. But we were hearing from chief risk officers who were literally working 24-hour shifts inputting customer applications, it was crazy. And so we stood up a online application system to help with PPP loan reviews, trying to get the data input as fast as possible, using data quickly. And then in parallel, we were working on portfolio management while addressing PPP, and we realized there was an obvious overlap. In the UK, we'd been looking at the impact of COVID first as a supply chain related stress, and then as a demand stress on the economy. And as the global economy slowed and there were shutdowns everywhere, we used the tools we developed to help customers bank and some other clients stress test their portfolio to look at what does COVID impact look like, what is the impact of various different types of lockdowns, which industries are going to suffer the most, which industries might actually grow. We're doing this on video conference. Who would have thought a couple of years ago that you'd be doing webinars on video conferencing and so on. So there are some industries that have grown tremendously, like sort of consumer-facing fitness and wellness that is delivered online, for example, has had incredible growth. And so what we looked at is various scenarios, and that we hardened into what we now call our forward-looking rating model, which basically looks at each company and the industry that it's in tries to forecast revenues, costs, and so on, and give a real good sense of the cash flows of that business so that you can actually address, okay, what does debt capacity look like in this business and so on, with reference in external data and so on. Sam, I don't know if there's anything you want to add about it.
Yeah, sure. No, absolutely. I'll add a little bit of to talk to the partnership a bit to add to that from Sean's perspective is that it was important as a community bank for us to have a tech forward partner like Oak North. They helped us put up our first application, which admittedly was really just a digital application of a PDF form, but really helped us put together all of the workflow. Sean's from Palantir, and then there's executives from Google and all kinds of tech companies and dozens of engineers relative to, we can count them on hands at our organization, and I think that was incredibly helpful. And we set up teams in the US, the UK, and also offshore in Asia. So we had 24-hour teams working from a tech perspective, from an underwriting perspective, from a technology perspective, fully automating this process to the best of our ability at that time. We got much better, this time around when we had a 9-month head start as opposed to a 9-day head start, last year. But I think that, having a partner like Oak North in that type of situation allowed us to move much more quickly. And it felt more like a partnership as opposed to a bank building, a fully automated, process. And I think that, while that's something that we aspire to do for the next round, Oak North, while it's not part of our core, it's not in the contract, with Oak North that they're going to help us with PPP. Nonetheless, they rolled up their sleeves and really helped us, open up a portal. And what we noticed when we opened up the portal was it started with the $1 million loans and the $500,000 loans. And then again, looking at the data is really what helped us pivot even last April, which is we saw the loans were getting smaller and smaller and smaller. And it was something about the initial surge. Generally, the larger customers were getting serviced by their banks. Some of those ones were applying to us because there were very few portals where you didn't have to be an existing customer. But then you realize the democratization of an online portal versus by looking at the data and seeing that smaller and smaller businesses were coming. And I think that's when we really felt we needed to turn it on hard. And we expanded our partnerships well beyond, our direct process with Oak North, which was coming through our website, but then really, working with a number of, SMB partners, fintech partners, and origination partners, as well, who kind of helped us at the top of the funnel put it all together.
Sam, as a follow-up question on that, I know I've had several conversations with bankers around the issuance of PPP and saying, hey, we're building some loyalty, we're gaining new customers through this process. Are you looking at leveraging data and leveraging your relationship with Oak North in terms of retaining those customers and enhancing those relationships and growing those relationships?
No, absolutely. We are, we're very, as an institution, as you can imagine, we're very focused on how do we convert these technically commercial customers, even though a large segment of these kind of look and feel like independent contractors or really micro businesses, which look kind of similar to a consumer. But having the access to data across the country through multiple data sources is allowing us to think about very different ways to segment, approach, look at how we may need to. It's one thing to know who the customer is, because as Customers Bank prior to PPP, we know who we're targeting. We know who we want our customer to be. We know who we are. From a PPP perspective, we're administering a government relief program where we have a couple of important responsibilities as a bank, but really that was more just open up the funnel process in a first in, first out basis. So now that there are customers of the bank, now we have to say who are the customers, and not just who are they, really try to understand who they are. Not this is how many employees they have. They're based in Louisville, Kentucky. They're a yoga student. We really need to kind of truly identify who they are, where they're located, try to triangulate what they may need in the future, how they're potentially tracking, because we now have data for especially folks that worked with us twice, how they were performing last year versus how they're performing this year. And I think that's the way that we're approaching the conversion of these customers. Our existing commercial customer base is somewhere around 3,000 or 4,000 customers prior to PPP. So adding 320,000 or whatever the number is, additional customers, as you can imagine, just if you look at our few thousand, there is multiples of that from a lookalike perspective that look just like our own customers. And then there's 50,000 in this group and 50,000 in this group, and we only have to convert just a couple for it to be a wildly successful recurring program for us. And I think that's where we're really focused from a data perspective. And we recently hired a new head of digital marketing who's joining us from MasterCard to really help us enhance and target those customers, because you're absolutely right. There are one product government program customers that we now need to convert to a portion of those that we want to Customers Bank, lifetime customers.
Awesome. Sean, wanted to ask you, as you're looking, we've heard about Sam and the Customers Bank journey on data. How do you see Oak North, and where do you see room for customers to further that journey in terms of leveraging data? How will you guys work together on this?
Yeah, well, I mean, I think there's so many opportunities. It makes me very excited because I'm a nerd. But I mean, I think one of the things which is very topical at the moment is climate-related financial risk, for example. We've heard from central banks, we've heard from regulators, we've heard from the president, we've heard from Treasury Secretary Yellen, how important it is for banks to start to understand the risks to industry from the transitions that are going to need to be made, and so on, to a lower carbon impact economy. And obviously there are going to be tremendous ramifications from those changes. And so this climate-related financial risk is a very important topic. And again, we see this as very fundamentally a data problem. But it has a lot of the elements that Sam mentioned earlier, because there is no data around how the transition is going to impact these businesses, because obviously this is all new. And so you need to use data you can't just use pure historical data. You have to make intelligent forecasting. You have to do a very granular look at each of the sub-industries to understand how customers are going to be impacted. But we think that's very important. We've got a climate scenarios framework we've been developing, which we're hoping to roll out and work with Customers Bank on. I think there are other opportunities, as Sam said, like when you have a government program like this PPP program, a lot of institutions around the country were just focused on, oh man, this is so operationally intensive, it's such a complete nightmare, and so on. How do we get through this? But I think there are a few institutions like Customers Bank who are sort of really running to the sound of gunfire and saying, hang on a second, this is actually an opportunity to have a really positive social impact, which is very important at a very important time, but also win some real loyalty, because if you're actually helping these small businesses at a very crucial time of their evolution, then hopefully you can build loyal customer relationships. But that's founded on really great service, it's founded on data and so on. So we're very excited to work with customers on all those topics.
Well, I think with that, you just talked about a big upcoming challenge with measuring climate risk, and that is a huge challenge. But we'll dial it back a little bit with our next poll question and see how our audience feels specifically about the challenges when it comes to data. We've got a lot of challenges listed here in terms of supply, organization, privacy and user permissions, as well as management, storing and protecting the data. You need to pick one choice. You may have multiple challenges, but pick the one that kind of best aligns with what's going on in your organization. Maybe pick that top challenge. Sam, as folks are responding, I'd appreciate your point of view. We talked about a lot of challenges that you're overcoming, but if you were to have to pick one of these, what kind of suits where you are now and kind of the big challenge that you see needing to overcome potentially?
Oh, sorry, Emily, was that for me? Yes,
sorry.
Oh, yeah.
Sam, for you, yes.
Yep. Sorry, I have a barking dog in the background who's trying to get into the room. The trials and tribulations of working from home. I think that we at Customers Bank, we've I'll give you some perspective. We've instituted OKRs, objectives and key results, come from the Google and originally from the Intel world. And one of our the 12-month company goals, which the whole organization is cascading around, is immediate access to real-time, we call it live data, that we make daily decisions on. So I think that's that's really what we're shooting for. We're not there. It's aspirational. It's a moving target, but that's what we're working towards. And if we get if we get to a point where even the majority of our team members, as opposed to right now a subset, are thinking and acting and influencing how they operate on a daily basis, I think that we would be not just ahead of the industry, but at the top echelon of the industry. So I think that that's what banks should really be striving for. At Customers Bank, I would like to have sufficient data that's well structured, accessible, and actionable, so that we feel very, very confident about the decisions that we make on credit, on customer targeting, on deployment of new products and services. It sounds very common sense that you want to make sure that you're thinking about your highest margin products and as opposed to the highest volume of products, and triangulating all of the profit times volume. And it all sounds very, very easy to think about, but it's not the way that banks have thought about the world, especially when we now have to think about a digital branch. So what I would say is, regardless of the data, our decisions are very complex and will never guarantee 100% success. But nonetheless, that hybrid approach of being a traditional bank with experienced bankers, but also having that fintech mindset, will allow us to move with certainty and confidence.
All right, well, we'll close this poll out. And just to let you guys know, almost half picked all of them. These are huge challenges, and so they basically, we can't pick, they're all big challenges. But we did have a quarter pointing to supply, and we had a quarter specifically pointing to organization. And Sean, I know you've talked in the past about that supply issue, about taking subsector forward-looking view of the data that gets to supply, and as well as some other things. I was hoping you could explain that concept a bit, what you mean by taking a subsector forward-looking view, and maybe even offer an example to illustrate that concept.
Yeah, sure. And I think supply really shines a light on it. I mean, if say you're a bank in New York, and a small business customer comes to you and says, "Hey, I want a loan for my restaurant," right? Well, it makes a huge difference if you're talking about a steakhouse on Madison Avenue versus you're talking a kind of hipster pizza place in Dumbo versus you're talking about a large volume takeout pizza place maybe in the Bronx or something like that, right? Like, those differences really, really matter. And if you think about the COVID crisis and the lockdowns, we really saw this play out. All of the financial district and everything would have been completely shut down. Your steakhouse, which previously maybe was constantly packed with bankers celebrating large M&A transactions and taking clients out for meals and so on, would have been completely shut down, versus the takeout place probably was doing even more volume than ever before because a lot of people were at home and getting takeout. And so these kinds of really, really fine differences actually make a tremendous difference, especially when the system is under stress. Now, when you're talking about supply specifically, it really, really, that's where the rubber really hits the road. It's very, very difficult to get granular data around the performance of small and medium-sized businesses. And that's true in the US, and it's actually true everywhere. I've actually spoken to bankers, from San Francisco to the Philippines, and everywhere they say, "Oh yeah, in my country, it's actually really difficult to get the same. It's really hard everywhere." So, whereas you have tremendous data about public listed companies, because obviously it's all in their financial reports and their 10Qs and all that kind of stuff. For small and medium-sized companies, it's actually very hard. And so, say you're trying to do a loan to a takeout pizza place, you really want to know, okay, what's their average spend per customer? How many customers on average do they have on a particular day of the week? These are very basic kinds of questions so you can understand the turnover of the business. Well, unless you actually have a lot of other takeaway pizza businesses in your portfolio already, it's very hard to know, is this business a really great business? Are they actually subpar for the industry? Versus, is the borrower actually spinning me a line and giving me some business plan numbers that don't stack up? So supply of data is very important. And then, as Sam pointed out, having the data is only one half of the picture. You've got to be prepared to use the data intelligently, and that means getting your people to adopt the software that you use and empowering them to make decisions based on data and having the culture of wanting to learn, wanting to change, wanting to do a more data-driven approach. And I think that's very important.
All right. Well, I've got one final question for the both of you, but I do want to have a quick reminder for our audience. There's still time to get any questions in. We'll try to have a little bit of Q&A here at the end of this in just a couple of minutes. So if you have any questions for Sam, if you have any questions for Sean, get them in, and we'll ask what we can. So we've really talked about a journey in a lot of ways during this discussion. So I'm thinking a little bit about Endgame. I watch it. I love the Avengers and stuff. So let's frame it that way. But so thinking about kind of that ultimate state, data nirvana, if you will. I'm curious what that means for both of you. So Sam, we'll start with you. I mean, what's kind of a great goal for data?
What I would say is a little bit of what I'll summarize what I said before. Where we are today as an industry, as a country, just from an access to data and also technology, it's making daily data-driven decisions with access to live data.
All right, that's a good one. Sean, how would you follow that up?
I might not be able to be as succinct as Sam said, but basically, I think there's kind of 3 dimensions to it. The one is really understanding the customer, so being able to put together all of the different pieces of data that you have, all of the dots in all the different systems around that customer to really understand them. Then the second dimension is the macroeconomic picture. Is okay, I understand my customer, but how well do I understand the industry that they're in, the sort of economic winds that are buffeting that industry. And then the final piece is, how do I understand how that company compares to its peers? And that's the one that I think is very challenging at the moment. We're looking at a kind of give to get model where, on an anonymous basis, if people participate, they can receive benchmarks around averages of companies and so on, so they get a reference data set, which gives them an idea of kind of how businesses should perform in different sub-industries. I think if we can get this kind of thing right, it'll ultimately mean better decisions, as Sam meant, which for the end consumer means fewer defaults, fewer loan write-offs, a better experience for the borrower because their bank is actually able to offer them the right product at the right time. So I think the end goal is very valuable, but obviously there's a lot to do to get there.
Well, we've had a couple of questions come in, so we'll try to again address what we can before we close our session out. The first one asked about, and Sam, I think this is pitched to you, but Sean, feel free to chime in after Sam's had a chance to give his feedback. So just can you give a specific example of how you use data now, not in the future, but maybe a specific use case, maybe one that's been particularly strong for your bank?
Sure. So I think that one of the things that we're trying to excel in today is to be able to use customer data that we have access to, that the customer technically has access to but isn't analyzing, to then serve up products, services, anticipate their needs using automated, sort of CRM, Salesforce type journeys. So it's a work in progress, but it's an example of something that we're doing in real time today. And obviously, there's a lot that we're doing on the Oak North side. So Sean could probably talk to a little bit of that from the portfolio management perspective, because that's also very interesting, as opposed to just cross-selling, cross-buying, revenue generation. There's also a lot in the portfolio management, credit monitoring side.
Yeah, so the example there is what we do is we use external data to understand each sub-industry that borrowers are in, and then look at what are the main drivers of that industry. So if you've got, I don't know, a metal manufacturer, well, they'll be affected by the prices of energy, the prices of steel, there are other raw materials, and then also the economic growth of the industries they sell into. So a company that makes car parts that go into, automobiles is going to be completely different from a company that makes, steel widgets that go into, tractors or go into factory machines. And so using external data, we can understand the dynamics of those industries and then help, as Sam said, anticipate the customer's needs so that you can offer them better products and give them ultimately a better service.
Another question for you, Sam. You talked a bit about perhaps employee adoption. Employees really making use of the data, which kind of gets into change management and culture and getting your employees on board. How are you addressing that?
It's a very good point, and there's no one in the banking industry can say that they've nailed that or solved. I think that the pandemic has been very helpful for tech adoption across the country, across the world, let alone in the banking industry. So that has forced a lot of folks to think about things in a different way, whether it's using Teams or Slack or et cetera. But I think that the culture that we've tried to sort of institute is a collaborative, constructive culture. So if we see inefficiencies in small ways, someone from our treasury department who might send out daily reports, which they're pulling data, putting in Excel, creating a chart, PDFing the chart, sending it to an email list that someone may not read. That's probably taking 30 minutes a day of a well-paid, team member. We call it out in a way to say, how can that process be automated? What is the actual way that our executives, do they need to see this on a daily basis? Do they need to see this on a weekly basis? Do they need to see all these rows and columns? And those are the types of things that we're doing at the organization to help call out. We sort of say, if you see something, say something, to how can we make the company more efficient? And it's done in a way to not replace a job, to not marginalize a team member. It's in a way to what I say is, how can we make ourselves superhuman? And that's how we should think about, the use of technology. So it's definitely a path that everyone is on. But that's just an example of some of the ways that we focus on change management, because change management can be one of the most difficult. That's why I said I use the CD-ROM example, because our organization is relatively young by banking standards. Most of our executives are in their low to mid 50s, which myself excluded, which is I think a relatively young for the banking industry. However, still talking about APIs and what that actually means and how we're actually transferring data, explaining the blockchain to all of our operations and risk and board members when we launched our payments platform. It's not easy, but it just takes continuous work. But we need the core of our company is those experienced lenders, those experienced deposit gatherers, those experienced risk managers. And so we feel the hybrid approach of training all of our team members to think in a more tech forward way is the best of both worlds, because the fintechs are becoming niche providers and they are supplementing customer service and experience with, I tend to think this because I've signed up for all of their products. I think that they have Ivy League educated folks on the customer service end of the line, which eventually they won't have, but that's what they're doing now. So if we can have experienced bankers plus the technology, maybe not for every single product and services, but the products and services that matter most for us and our customers, I think we'll have the best of both worlds.
Another question for you, Sam. Looking at the events of the past year and a half-ish with the pandemic, curious if that has changed your view or maybe your approach to your data strategy a little bit, or maybe identified some areas of improvement that maybe you wouldn't have noticed without the experience we've had over the past, year.
Absolutely. I think that, in a couple different ways. One is, you really don't notice things unless you do them in a high volume way. as a bank. You don't notice if there's X number of people in loan operations and no more than Y loans that close in a day. You're not going to notice if there's that much inefficiency, or you're not able to monitor how much adoption there is or how much penetration you have in the most accurate and effective way. So I think that we learned a lot about our customer and how our customer was operating and how we could serve them better. We also learned an incredible amount about our internal operations because we had to do everything in a high volume way. I think that we leapfrogged by 5 to 10 years in the way that we think about, our entire, digital onboarding, digital servicing process through our PPP efforts, because we just had, we were booking, thousands, if not tens of thousands of loans potentially in a day.
Sean, you've been working with banks yourself during this process, and as you said, you sprung from a bank yourself. What have you taken away in terms of data? What have been your lessons learned that may be important for banks to know out of this experience?
Yeah, well, I think two things. So the first is, the old way of just looking at the past and assuming the future is going to be like the past. We've seen that doesn't work. When you have a real disruption, that model really fails in a very unhelpful way. The second thing, which is kind of interesting, as Sam mentioned, there's a kind of a virtuous cycle. It's like once you, and the crisis has forced banks to be agile. They've sort of like, even the larger banks have realized, oh, actually we can kind of tap dance if we have to. And they're forced to be more innovative, more agile, which I think is positive. But the virtuous cycle is once you make that leap and you start to do things in a more digital efficient way, obviously it's more efficient, but the second order effect of that is you collecting the data in a digital way, you can actually use it much more effectively, and so things improve. So these processes, the digital processes, gather data as a side effect of working, and that allows you to better understand your customers, better serve them in future. And so I think that the outlook from the pandemic, as terrible as this has been, is positive in the sense that, if banks take from this the lesson that they can be more agile, they can make data-driven decisions, and they can do processes in a digital way that gathers more data to feed those data-driven decisions, I think that's going to be positive.
Well, Sean, I think that's a good way to close up this discussion. This has been so informative. So thank you, Sam. Thank you, Sean. Do want to remind our audience that you're going to receive the recorded version of this webinar within 24 hours. But you can also find it on bankdirector.com and oaknorth.com if you'd like to view it later or share it with your friends. But again, thanks to Sam, thanks to Sean, thank you to Oak North for co-hosting today's webinar, and thank you out there for joining us today. I hope you have a great rest of your day.
Thanks, Emily. Thanks, audience. Appreciate it.